Ever wish there was like a better way to invest? One that felt, I don't know, more ethical.
And with everything that's been going on in the markets, maybe a bit more stable too. Well, get this. Today's deep dive is about a place where those two wishes, ethical and stable, might actually meet. We're talking Islamic finance and its, well, kind of surprising connection to the world of decentralized finance, DeFi, for those in the know.
It really is a fascinating clash of titans when you think about it. Centuries-old traditions of Islamic finance meeting, like the lightning speed of blockchain technology. A real study in contrasts.
Totally, because on the one hand, you've got this ancient system that's all about no interest, opting instead for sharing profits and losses. And then on the other, there's DeFi, which, let's be honest, can sometimes feel like the Wild West of finance.
Absolutely. And after high-profile DeFi platforms, I'm talking FTX, Luna, went up in smoke, well, people started asking, could Islamic finance, with its focus on ethics and actually managing risk, have made a difference? So that's where we're diving in today. Love it. So for anyone needing a quick refresher, picture a financial system built not on Wall Street, but on the blockchain, a public digital record. Everything's transparent, can't tamper with it. That's the foundation of DeFi. And then add in smart contracts, basically, self-executing agreements written in code. They can handle loans, investments, you name it, all without a traditional bank.
And that transparency, that traceability you mentioned, it actually lines up surprisingly well with some core Islamic finance principles, although gotta be honest, the current DeFi landscape still has some work to do before it's, fully aligned.
Right. So let's break down Islamic finance a bit. It all boils down to three core tenets. First up, riba, interest. Big no-no. Instead, it's about profit and loss sharing, almost like a partnership, really.
Exactly. And there are specific frameworks for this, like mudaraba, where one party puts up the capital, the other brings the expertise. Let's say you've got some savings, but I don't know, you don't have the time or the know-how to invest in, say, a sustainable vertical farm, right?
Yeah.
Mudaraba lets you partner with an expert who gets that farm up and running. You both share the profits from the harvest, and boom, all of it's managed through a transparent smart contract.
See, that's a way tastier way to picture investments than just like numbers on a screen. Okay, principle number 2, avoiding excessive risk and uncertainty. Islamic finance calls this gharar, gambling, out, totally. But even things like speculative trading of certain assets, that can get a little blurry.
That's a major point of friction with a lot of the DeFi space right now, which, let's face it, is often associated with high-risk, high-reward kind of stuff. But before we get into all that, let's hit that third principle. Islamic finance insists on every transaction involving something tangible, something with real-world value, asset-backed all the way.
Tangible assets. Got it. Real estate, commodities, things with like inherent value.
Exactly. And this is where things get really interesting, because it forces us to ask, how do you bridge the gap between this very digital world of DeFi and this need for tangible assets within Islamic finance? Can you actually have something like Shariah compliant DeFi?
And if you can, what would it even look like? Would we all be investing in like digital tokens that represent fractions of a solar farm instead of, the latest meme coin?
Now you're thinking along the right lines. That's the potential beauty of merging these two worlds, right? But it's not without its challenges, especially when you start thinking about things like speculation and risk.
Okay, so we've got these like intriguing parallels between DeFi and Islamic finance, but then there's that one word, the one that makes some folks kind of nervous, speculation.
Yeah.
It's like DeFi's guilty pleasure or something. And Islamic finance, all about gharar, says like pump the brakes on excessive risk, right? So how do you even begin to reconcile those two things?
It's definitely a challenge, I won't lie, but I don't think it's insurmountable. Remember we talked a bit about risk-sharing pools earlier. That's one route people are looking at.
Oh, yeah. Remind me how those would work, but like in a DeFi way.
Okay, so picture a pool where instead of investing in some vague thing you don't really get, it's all about tangible assets, stuff everyone understands. Maybe it's a bunch of like sustainable farms or green energy projects. But the point is, you know what the underlying assets are. Risks are clear, out in the open.
No more black box investing.
Yep.
I can get behind that. But like, how's that Islamic finance?
It's very similar to this concept of takaful, which is sort of like a cooperative insurance model, but in the Islamic finance world, people contribute to this pool, and it protects them from losses, right? But the whole foundation is shared risk, almost a community feel, not just chasing crazy returns.
Right. So it's risk management, but like with, I don't know, good vibes, more aligned with everything else we've been saying. Okay, so we've got the profit sharing thing down, the asset backing, risk sharing.
Yeah.
But there's like one more elephant in the room. Or should I say, Bitcoin in the blockchain.
You're talking about the volatility issue, crypto itself.
Bingo. I mean, if we're going to build this ethical, stable system, how does, like, Bitcoin even fit in? Does Shariah-compliant DeFi had to be like, sorry, Bitcoin, you're out?
Not necessarily, no. I mean, at its core, Islamic finance is about making sure those financial mechanisms, whatever they are, match up with the ethical side. And there's this concept, murabaha. It's a cost-plus financing method used a lot in trade, buying assets. Big emphasis on transparency, being fair in the deal.
Okay, I think I see where you're going with it. Could you apply that same idea to, like, DeFi and crypto?
Exactly. Let's talk stablecoins. As the name implies, these are digital currencies, but they're designed to hold a stable value. Often they're pegged to something real world, like the US dollar or gold.
Right, but even some stablecoins have had, a rough time lately.
And there's a reason for that. A lot of them, they aren't actually backed by anything tangible. It's all algorithms, fancy financial engineering, which, surprise, can lead to instability, risk. But now imagine this. Shariah-compliant DeFi, but they're issuing stablecoins that are fully backed by real assets, gold, government-approved real estate even, or a basket of commodities.
Okay, so instead of trusting some algorithm, there's, like, actual stuff backing your digital money, which, again, brings us back to that whole asset-backed thing Islamic finance is big on.
Exactly. These asset-backed stablecoins, you could use them for all sorts of activities within DeFi. Murabaha contracts, for example. Keeps it transparent, avoids that direct currency speculation game.
Now we're talking. So instead of buying, a car with crazy volatile crypto, you could use a stablecoin that's backed by, like, ethically sourced coffee beans or something.
See, now you're getting it. And that car purchase, done with a transparent Murabaha contract on the blockchain. Platform buys the car at a set price, sells it to you, the buyer, at a clearly defined markup. Everything's upfront, agreed on. No hidden surprises or wild speculation.
Okay, now we're really cooking. It feels like we're building something more complete here. Profit sharing with Mudarabah, then the risk sharing from those Takaful-inspired pools, and now asset-backed stablecoins for more transparent, ethical financing. It's all starting to click.
Right. It's not just abstract anymore. We're talking about the potential building blocks of an entirely new financial system. Maybe one that's more ethical, definitely more transparent, and hey, maybe a lot more stable too.
It is pretty radical when you say it like that, using these, like, ancient principles to reshape the most cutting-edge part of finance. But before we get too far ahead of ourselves, let's bring it back down to earth for a second. Let's revisit those DeFi meltdowns we talked about, FTX, Luna. Knowing what we know now, could Islamic finance have changed how things went down?
Well, we can't rewrite history, unfortunately, but it is a fascinating thought experiment. Let's start with FTX. Their collapse, it was just this, like, perfect storm of terrible risk management and zero transparency. They were basically gambling with people's money, and most people had no idea what was actually going on.
Which, if I'm following along correctly, goes against, like, every rule in the Islamic finance playbook.
100%. Imagine if, instead, FTX had played by those Shariah-compliant DeFi rules. That whole lack of transparency around their investments, dead on arrival.
Because transparency is, like, non-negotiable in Islamic finance. It's not just about avoiding interest. It's about making sure everyone involved knows exactly what they're getting into, what the risks are. No shady business.
And let's not forget how wildly speculative their activities were. Islamic finance is all about investing in things with real-world value, things with clear, understandable risk profiles. That high-stakes derivatives trading that took down FTX. Yeah, that wouldn't have flown for a second under Islamic finance guidelines.
So it's almost like Islamic finance has this, like, built-in risk aversion that could have been a very loud, very necessary alarm bell in the whole FTX situation.
In many ways, absolutely. Of course, no system is perfect, but the emphasis on ethical behavior, on really understanding and managing risk, and on being transparent, well, it could have dramatically changed how the FTX story played out.
So FTX, yeah, it seemed like a pretty clear clash with those Islamic finance ideas. But what about Luna? That was like a whole different kind of meltdown, right?
Totally. Luna, that was a big warning sign about those algorithmic stablecoins, the ones without, actual assets backing them up. It's like they were trying to build stability out of nothing. And, well, we saw how well that went.
And who could forget that whole yield farming craze? Promising, like, insane returns, but then, boom, just made the whole thing collapse even faster.
Exactly. But, okay, now picture this. Luna, but built on those Islamic finance principles from the ground up. That whole algorithmic stablecoin thing wouldn't have even left the starting line, because Islamic finance, it's all about that asset backing. Got to have something real, something genuinely stable behind those digital tokens can't just be built on, I don't know, good intentions.
So instead of algorithms and promises, Luna would needed a stablecoin backed by like a big pile of gold bars or a whole portfolio of real estate, something like that.
You got it. That real-world backing would have brought a level of, well, stability that Luna just didn't have. It's about trust, but also, actual stuff you can point to.
Makes sense. And what about all that yield farming craziness? How would Islamic finance have, dealt with that whole thing?
So Islamic finance, it doesn't say you can't make money, obviously, but it does stress that investments should be ethical, sustainable, tied to real economic activity, the kind of risky yield farming that was happening in Luna's world. Yeah, that would set off some major alarm bells.
So instead of just chasing those, sky-high returns, a Shariah-compliant Luna would have been focused on a different kind of ecosystem. More stable, definitely more ethical, maybe even using that takaful risk-sharing model we talked about. Kind of a safety net for everyone.
100%. It always comes back to making sure your financial mechanisms, the way you do things, matches up with those ethical principles. And not just for, warm and fuzzy feelings. As we saw with FTX going down in flames and imagining, how a different kind of Luna might have played out, it can also mean more stability, more resilience in the long run.
It really is kind of mind-blowing to think about. These, ancient principles, they could actually have something important to say about the future of finance. I mean, we're talking about potentially changing the entire DeFi landscape, building a system that's not just about, making as much money as possible, but one that actually lines up with ethical values.
And let's not forget the inclusion aspect. Islamic finance has always cared about ethical financial access, especially for people who traditional banking systems have left behind. Now, combine that with what DeFi could do, breaking down those geographical barriers, right? We could be talking about a financial system that's actually more inclusive, helping way more people across the globe.
Best of both worlds, right? The ethics of Islamic finance plus the tech of DeFi, all mixed together to make something totally new, something potentially, world-changing.
And the coolest part is, we're really just at the very beginning of seeing those two worlds collide. Think about all the potential for new stuff, for completely different financial tools and models, but ones that actually work with Islamic principles and blockchain tech.
So for everyone listening, here's a little something to chew on. If DeFi, even with all its experimental craziness, can figure out how to align itself with these ancient ethical principles, what else is possible? What happens when we start questioning the very foundation of money itself, how we invest, the whole global financial system?
That's a question worth asking. As we've been talking, digging into the potential problems, but also the really exciting possibilities here, one thing's clear. The future of finance, it's being written right now.
Yeah.
And it's definitely a future full of surprises.
And on that note, we'll let you keep going on your own deep dive. Until next time, keep asking those tough questions. And remember, the future of finance might be a lot closer than you think.